Operating expenses, also known as OPEX. These are the things I have purchased that help me run my business. My business is an orange juice stand. I bought the wooden stand and I bought a cash register. Operating expenses are the costs of things that help me run the day-to-day business. If I had employees, their wages would be operating expenses. If I rented a shop, that would be an operating expense. Different companies will list different operating expenses on their income statement. Here are some of the most common items. Depreciation. Depreciation is how you account for the cost of long-term physical assets. Physical assets are things that you can touch. They are also called tangible assets. My cash register is an example of a tangible asset. Let's assume my cash register costs $1,000 and it will last me 10 years. Rather than recording the cost all in one go, we depreciate it over its lifetime, in this case, 10 years. I would record $100 of depreciation every year for 10 years. In accounting, we depreciate assets that are expected to be used for longer than a year. We would depreciate things such as vehicles, machinery, and buildings. Amortization. Amortization is like depreciation, but instead of accounting for physical assets, it accounts for non-physical assets. Non-physical assets are called intangible assets. Let's say I purchase a software license to help me organize my inventory. The license isn't a physical product, so it's an intangible asset. Let's assume I pay $500 for the license up front and it will last 5 years. Like the cash register, we don't record the entire cost right away. Instead, we amortize the cost over its lifetime. In this case, 5 years. I would record a $100 expense every year for 5 years. In accounting, we amortize intangible assets such as computer software, licenses, trademarks, patents, and copyrights. Selling, general, and administration. Selling, general, and admin includes a lot of different expenses such as management salaries, advertising, marketing, rent, utilities, travel costs, flights, legal fees, and payroll. Research and development. Research and development is the cost of developing new products. Let's say I want to start selling lemonade. I spend $50 experimenting on the recipe. That cost of designing and creating my new product would go into research and development. Okay, so now we know what operating expenses are. But why should we care about them? Like most metrics, operating expenses on its own is not highly valuable. It might look good if operating expenses go down, but operating expenses go down if I sell part of my business, and selling part of my business may not be a good thing. You might think that's bad if operating expenses go up, but operating expenses can go up when I expand my business, and expanding my business is usually a good thing. But with operating expenses, we can calculate operating profit, and from operating profit, I can calculate my operating margin. These are two things that tell me a lot about the business. Want to learn about operating profit? Join me in my next lesson. For more videos on investing, follow Value Theory or go to valueinvestoracademy.com.